If there's one thing I'm certain of, it's that 99% of you guys don't understand or even know what liquidity is and how to use it. Which is why in today's video, I'm going to be breaking down exactly what liquidity is and how I use it to achieve over an 80% win rate. I want to start off by explaining what exactly liquidity is, because you guys might have been taught what you think or believe that it really is. And to be honest, this is not the way I was taught. This is the way I taught myself and learned through over 3 years of trading experience and over $450,000 in prop firm payouts that I've been accumulating over the last 2 years of being what I consider is a pretty successful trader, right? I've accumulated more payouts than most of your favorite gurus have in their entire lifetimes in just 2 years. So this is how I view liquidity and how I understand it truly works in the market. Let me bring this over for you guys to be able to completely see. All right, what I classify as liquidity is areas in the market where there are resting orders in the opposing direction, right? So we can expect price to run through certain pools of liquidity, right? And there are a lot of common misconceptions which I'm also going to go over right now. Right, if we go over here, we can see some common misconceptions are you need a sweep of liquidity before a longer short entry. And I will cover everything that I'm going over now. This is just a little teaser to explain later in the video why these are common misconceptions, right? A lot of you guys are meant or taught that a lot of you guys are shit, crop, edit that part out. A lot of you guys are taught to believe that price only moves based off liquidity. You are taught that every high and low is a significant pool of liquidity, right? So when I tell you guys that a pool of liquidity is where there's orders resting in the market, I simply mean that these highs all have sellers. So when I'm telling you that there's liquidity in the market, I'm telling you that these highs all have sell orders pending to be filled. So I'm talking about the market wants to essentially move lower, right? There's people shorting here, there's people shorting here, and there's people shorting here. All these people have their stop losses up here and here and here, right? So in theory, what the market is going to do, the market is going to run up, stop everyone out in order to grab liquidity for themselves before pushing lower. So the whole theory behind liquidity is essentially there is always going to be stop losses at swing highs and lows. So the market gathers those significant pools of liquidity, algorithmically stop hunts traders, and then pushes lower by filling their own orders. So big banks and big institutions, essentially the whole theory is they see all of us retail traders have our stop losses at protected highs and lows, and in theory they're supposed to stop us out to fill their own orders. Now, do I believe that? Do I truly buy that? Absolutely not. That is what we were taught as traders. That is what is online and everyone is naturally taught. Do I believe the market does move like this though? 100%. Do I believe the theory that a bank sees my stop loss and is stop hunting me? No, that's the biggest cope I've heard in my life. That is everyone online saying like, oh, I got stop hunted. I got the bank saw my order. Do you think a bank cares about you with your little demo account and your $50,000 fake funded account that you spent $50 on? No, banks don't care about us. Obviously not, right? But this model is truly effective in the market. And I'm going to show you a bunch of real examples, right? But first off, I want to show you how I view this. Most people, like I told you before, they wait for these highs to get swept before looking for a short entry, right? I do the opposite. I view these highs as what I consider, let's take a look at what I said here. What is liquidity? We only want price to run through certain pools. Pools of liquidity is going to be a group of highs or a group of lows in the market, or a significant time period, also known as a session, such as Asia, London, New York AM and PM. If you don't know what sessions are, I highly recommend just getting this indicator right here, ICT kill zones and pivots. Here are my settings. You guys can copy all of them. Asia, London, New York AM, New York lunch, New York PM. All this is showing you is the time sessions of price. And if we take a look at price, we essentially use these as take profits. Watch how price reacts when it takes out these significant pools, right? All we care about is the high and the low. Asia high, Asia low. What is price going to do? This is the Asian market. For those of you guys who don't know, this is the time period of the Asian market from 8 p.m. to I believe it is midnight. Yeah, so 8 p.m. to midnight is when the Asian market is open. And this is a significant time period because look how volatile this is. It is extremely volatile, meaning what? Meaning the high and low of this session's range is going to have a significant amount of orders pending there. Meaning what? When price takes out the high or the low, we can expect price to reverse, such as I showed you guys up here, the example I was showing you guys earlier, right? Where I want price to reverse once we take these highs out, right? Let's take a look back at how price actually moves in real time. We took that high out, Asian high, we dump all the way down. We make a London high, London low. What do? We take out London high, and then we come take out London low, and then what do? We take out Asian low, and almost immediately push higher. I actually caught this long here today. Or is this Tuesday? Oh yeah, I did catch this long. This was a terrible day. Wow. I was in longs this entire chop fest. I did end up hitting take profit and securing around another $1,000 in payouts, but that was a complete chop fest, right? Now, so what do I classify as significant pools of liquidity? Asian, London primarily. But if I am trading Asia, what do I target? I can target New York PM, right? For example, here, we could have targeted New York PM lows, Asia manipulated into an imbalance, and from there, we can long into New York PM. And what does this look like? Let's take a look at what this looks like. Is this not a bunch of stacked highs? Can you not draw a clear trend line through these highs? Yes, you can. You can draw a very clear trend line. Some people classify this as trend line liquidity. I don't trade trend lines, just so you guys know. I really don't. I've never learned them. I don't know how to use them, but the tool is literally just called a trend line. I'm just playing with what I'm given. And essentially, you can see here, you can take a look at 6 p.m. open. Wow, interesting. Dude, please do not trade 6 p.m. open. You guys should be waiting until at least 8 p.m. because that is a significant time period, a significant session that is 8 p.m. open, Asia open. So if we take a look, we have all this low resistance liquidity. Why, or what is low resistance liquidity? Low resistance liquidity is literally a line of highs that you can draw out on your chart. For example, here, you have a line of lows, right? We can expect price to just run through these lows as it did. This is actually a more clear example right here. We have all these lows right here that I want to see price take out. So this is low resistance liquidity, right? And what is this below low resistance liquidity? Asian lows. So if we have low resistance liquidity, which I consider LRL, that's what I call it. We have LRL resting above us, and Asia market just opened, and we also have that aligned with New York PM highs. What does that mean? New York lunch highs and New York AM highs. What does that mean? We can expect price to trade, in theory, all the way up here. Now, did we do that? No, we did not. I'm kind of surprised that we didn't. I'm not gonna lie. I was extremely bullish today, and I was incorrect. So this is an example of a failed theory. Even though I would obviously never hold my trade that long, I did, and I would have hit take profit if I would have taken this trade because I would have closed at New York PM highs, the closest session to us. New York PM highs, Asia open, money is lower, we get a nice displacement right here, and you can just target that high. And as you can see, it plays out beautifully, and you'd make a lot of money on that trade, right? Now, let's go more into detail. I just explained what Asia, London, New York PM, AM is. We also have previous day low, previous day high, previous week low, and previous week high. That is essentially just, let's say today is August 11th, today's Tuesday. We can target Monday's low and Monday's high, right? That is also a very significant zone of liquidity. And as you can see yesterday, we actually created, this is a perfect example. Yesterday, we created an unfilled daily fair value gap, right? Which is an unfilled imbalance. If you guys don't know what that is, please check out my other videos on it. But we have an unfilled imbalance below us, which is also aligned with what? Monday's low. So the Asia market, before the Asia market, we opened up at 6 p.m. Where are we right now? We have this low right here, which is Monday's low, an unfilled gap. What could we have done? We could have waited until 6 p.m. and then looked for some beautiful shorts down to this low, which if we take a look at the market, 6 p.m. opened at 18 right over here. So 6 p.m. opens. When do we get a short entry? We actually get a short entry more or less here. And you can just write that all the way down to these lows. Why? This is previous day low, and it is also an unfilled imbalance, which goes hand in hand with another misconception I taught you guys right over here. If we take a look at common misconceptions, price only moves based off liquidity. Wrong. Price moves for 3 reasons, and I recommend you write this down because I'm not writing it down for you, right? Price moves for 1 of 3 reasons every time it is moving. It is moving to take out a high or a low that is a significant pool of liquidity, which is what I taught you guys. Session liquidity or low resistance liquidity, which is a bunch of stacked highs or stacked lows that you can draw a clear trend line through, right? Price will also move to fill 0.5 of a range or tap into OTE of a range, which if you guys don't know what that is, please watch my video on discounts or premium and discount. That will cover everything you guys need to understand about that. Price also moves to fill imbalances, which is a fair value gap, right? So price will move to fill a fair value gap or a volume imbalance. It will move to fill OTE of a range or it will move to fill a significant pool of liquidity, right? Now, how do we use them? Because now I taught you what liquidity is, and I hope you understand it. It's just significant orders in the market that price is attracted to on literally every second of the day. I was going to say on a daily basis, but it's not on a daily basis. It is on a second basis. It literally moves every single day for that purpose, right? Or for one of the three purposes I just taught you guys. And how do we properly use that? We use it for three reasons. To identify draws, objectives for the day, as I told you guys earlier. What do we have here? So if we have previous day low here, and it's also an unfilled gap, what does that mean? That means price is going to move to fill that imbalance. And that also means we have previous day low. So now we have a significant draw on liquidity or a significant pool on liquidity. And we also have an unfilled imbalance. There you go. 2 reasons out of 3 for price to move lower. So now we have a very obvious objective for the day. What do we get? 6 p.m. open, it pushes lower. So we get an open high and then we push lower. That is a partial. Obviously, these are not trades I would actually take, guys, but these are examples of price moving towards a draw, right? And this is our objective. What is our objective? It is our take profit. Objective is always going to be our take profit. So now we know that why price moves. Price moves to fill imbalances, liquidity, or OTE of a range. And we can use those draws as our daily objectives, meaning, all right, today I want price to tap to previous day low, right? Today I want price to dump from here all the way down to Asia low, right? Today I want price to push higher all the way up to New York AM high and true day open. I want price right now to take out New York PM low. So what am I going to do? I'm going to look for a short, and that is my objective, right? You guys need objectives. Price moves every day to take out the objective, and day by day, if you practice this, you're not going to get it on the first day. You're not going to get it on the first week. But if you guys practice this every day and you practice telling yourself, what is the objective for today? And you see why you were wrong, write down what the objective was and why that was the objective. Write down why you were right and why that was the objective. Every day, write down why you were wrong and what was right and why it was right. Or if you were right, write down why you were right and why it was right, right? Or write down what you thought was right and why it was right. It's a tongue twister, right? But now that we're done with this, I can show you guys more into how I properly use it. Identify objectives for the day, avoiding bad setups, but we mainly do use it for taking profits, as I showed you guys. We marked out previous day low. That's my objective, meaning I want price to go there. So what am I going to do? I'm going to take profit once price gets there, right? So we mainly do use them as take profits. That is the example I was showing you guys up here, how most people see this low resistance liquidity. And let's say, all right, we also have Asian highs up here. So we have Asian highs resting up here with a bunch of low resistance liquidity. I have 2 options. Guys. I could either wait for price to take out Asian high and short off it, or I could long 2 Asian highs if I'm confident in that. And that is what I will do 99% of the time. I will wait for price to close above some bearish structure, confirming a bullish change in structure. This is also known as a break of structure, right? So we got a change in structure to the upside now. After having bearish momentum, we built this bearish trendline liquidity, which I consider low resistance liquidity. Why is it low resistance? Because it's not very resistant. Price will just run through it. That's literally in the nickname. It's in the wording. Low resistance, because price will literally just run through it, right? So we can expect price to just push down into this area, which could also be a fair value gap or OTE or some internal low, whatever structure provides us, and then rip higher. And then my entry will be somewhere in this second leg. I want price to put in a second swing low, meaning what? I want price to put in a higher high and a higher low to confirm price is truly in an uptrend. And then I will take a 1-to-1 to my objective. That is exactly how my strategy and system works. And that is how I use liquidity, right? But I'm going to cover another example that I mentioned here. Avoiding bad setups. What I mean by that is today is a prime example. Today I was extremely bullish, right? I told you guys I took longs. I took these longs here, right here. These are the longs I took. I took longs here and I also took longs here and I got stopped out. So I got stopped out and then I re-entered here and I ended up making money. But that's not the point. The point is I was bullish. I was extremely bullish today. I wanted longs. But what stopped me from longing? All right, we have Asian lows right here, and price is clearly displacing towards Asian lows. So around this time, it is 9:43 a.m., right? I'm looking for longs, but it's 9:43 a.m. The market's already open, and price has Asian lows right below it. So if we are this close to what I consider to be an objective and a significant pool of liquidity, I can expect price to sweep it and then give us a nice reversal. And then what? And then change structure to the upside, give us a lower low, and then enter on the leg to the upside to our draw on liquidity, which in this case, we have LR right here. right? We have LR right here. I'm surprised that we didn't push higher. Today's one of those days where I was wrong. I was just wrong about today because we did end up dumping a lot more, but I still made money because I took profit on my low resistance liquidity, right? So the original trade I took was based off the fact, mind you, a normal person, I don't think this is a bad long. A normal person who is my student would have probably taken this long on a normal day, including myself, right? If we didn't have Asian lows right below us. But the fact that we have a significant pool on liquidity, literally like 10 points away from price, means that I want price to first tap into the significant pool, give us a higher high, give us a higher low, and then give us a nice move to the upside to enter long towards what? Towards LR, towards these highs up here. And yeah, sure, you would have gotten break even if you targeted those highs above us, but you're not going to win every trade. That's just the reality of it, right? You're not meant to have a 100% win rate. That is not how trading works. If that was how trading worked, I would be risking my life savings on every single trade, on every trade, and that's just the reality of it, right? So I just showed you guys a real example of how I avoided losing a lot of money today on a decent setup simply because, or it was a bad setup in theory because you had Asian lows below you, but most of you guys wouldn't even think that. Most of you guys would just be like, oh my god, Ali's bullish, Ali's bullish today. Why? Ali's bullish because the daily time frame is bullish. We're in a daily bullish gap. The hourly is still bullish. The 15-minute is also bullish at this point in time. We didn't close bearish yet. Let me long. But no, because you have Asian lows right below you. So what you can do is you can wait for Asian lows to get swept and then push higher. I was actually very surprised that we didn't react off this right here. This would have been an A+ setup. Any day of the week, I would have taken this, by the way. I would have taken a long out of this section right here, 6.18, and then you long to the upside off a bullish reaction. This is what I wanted to see today. But instead, we kept dumping, no entry. And at this point in time, I'm like, all right, price is so low in the leg. There's no way we don't take out Asian lows. We took out Asian lows and then I looked for a long, right? So that's how you avoid bad setups. I taught you guys how to spot low resistance liquidity, stacked highs that you can draw a clear line through. I taught you guys what a significant pool is, right? Asia, London, New York, AM, PM, previous day high, previous day low. And I taught you guys how I apply the logic that there's resting orders in the market, very contradictive to what most people teach you. For example, today we have Asian lows right here, right? You could have taken a short off this imbalance right here. We tapped into a 5-minute bearish gap. Because you can see right here, we tapped into a 5-minute bearish gap, reacted out of it. That could have been your entry towards Asian lows, right? That's also my model, but I wanted longs today. So there's two ways you could have traded today. I had draws resting up here. I also had a draw resting down here, right? So instead of trading off a liquidity sweep, like you were taught, oh, we need to sweep liquidity and then price is going to reverse all the way. No, the only reason I took a trade off this liquidity sweep is because we were so close to Asia. I never take longs based off a liquidity sweep. That is not what I was doing today. That is not how I trade, and I will not allow my students to trade based off liquidity. Price isn't just going to sweep a random high and then immediately reverse. It has to be a significant pool of liquidity, and 90% of the time you will have a much higher win rate if you actually target those pools instead of trading away from them, right? The only reason today I traded away from it is because we swept it in a bullish market, right? You can't just take a trade based off a random sweep, right? And with that, here comes an end to this video. I always drop free sauce for you guys. I try to turn as many of you guys profitable. And I really do appreciate it when you guys use my code with your favorite prop firm. So code ALE will save you the max percentage off that any prop firm is offering right now. So make sure to use code ALE on your next purchase, and I'll see you boys in the next one. Peace out.